Good afternoon from Los Angeles and welcome to Stock Market Today. It's Alyssa Corum here, and on the show we're going to be taking a look at JPMorgan, TD Ameritrade, as well as Proofpoint. But first, let's take a look at the major indexes. And I'm joined today by Ed Carson. Ed, it was a pretty ugly day, reversing lower, weak manufacturing data. The Nasdaq finishing down about 1.1%, and the S&P down about 1.2%, breaking below a key level.
Yeah, I mean, the Nasdaq actually in the morning got above its 50-day moving average, so it looked very nice. And then 10 o'clock Eastern, the ISM Manufacturing Index came out, and it showed the sharpest contraction in 10 years, basically since the last recession. Really negative. Treasury yields plunged, and the S&P went all the way down, undercut its 50-day line. Dow almost did, and probably came just within a few points of doing that. Just really negative action in that regard. A lot of some of the financial breakouts that were still hanging on, they struggled, some other stuff, and we're going to talk about it, but man, really disconcerting. We know the market's already under pressure. Here we are in early October. Where were we a year ago?
Yeah, some deja vu perhaps, but and of course the weak manufacturing data, just one of the side effects of the China trade war.
Yeah, absolutely. I mean, and manufacturing's weak around the globe. So
Right.
President Trump blamed the strong dollar, but this is something that's happening around the world. Real problem for the whole economy.
All right, well, let's take a look at some individual names. We did see a lot of movers in the broker space today on news that Charles Schwab is eliminating its trading fees down to zero, joining Interactive Brokers on that. But peers got hit really hard today, so we're going to take a look at TD Ameritrade. That stock crumbled some 26%. Massive volume here, and the stock wasn't looking good before. This is a monthly chart here. You can see the stock falling to its lowest levels in several years.
Yeah, I mean, there have been fee wars for a while, and then Interactive Brokers came a few days ago. This is at a 3-year low. Really nasty selling. Ameritrade and E-Trade, they rely a little bit more on maybe the fees, and they had higher fees than Schwab already, maybe a little more reliant on the actual fees than Schwab, which has a little bit more wealth management. But it's just tough all over. They all fell really hard today. It's hard to make money on nothing. I mean, obviously, they're going to have margin interest. There's going to be some other wealth management. There may be other things, but definitely going to be tough.
And didn't they say that the fees were only a pretty small portion of their overall revenues?
Yeah, that's for Schwab, but still, when you're thinking about what's your profit margin,
right?
I mean, if it's 10% of your revenue, but if your margins are 10%, you're not making any money. I mean, I don't know what their margins are offhand, but it's really going to take a shot at their profitability.
That's right. Well, the broker war continues. So now let's take a look at another chart here. We want to look at Proofpoint because it staged a breakout earlier today before the broader market fell, so it reversed and turned tail. So a bit of negative action for this individual name that had been holding up pretty well. So its first test of this breakout met with some resistance.
Met with a little bit of resistance, I'd say. Yeah, it looked really nice just soon after the open. This had a couple things going for it. Cybersecurity stocks actually had a decent day today, and this was one of those stocks, if you look at the relative strength line, that's sort of that purplish line down there, that actually had been picking up. It had not been a leader for several months, and the software stocks that are doing well have been the ones that were sort of laggards and sort of coming on. So there were reasons to maybe think, oh, this might work, but in a bad market or a bad day, it's hard for leaders to hold up. And we've seen other stocks, they break out on earnings or some news, and then after that news pops out, then they fade away. So this sort of all happened in like an hour,
right?
Instead over a couple of days. But we've seen a lot of breakout struggle in the last few weeks.
Yeah, that's right. And it's interesting with Proofpoint because if you rewound the clock earlier in the year, its cybersecurity peers, CyberArk and Zscaler, were the two just super standout big movers, but they've kind of rolled over, whereas Proofpoint has held up during that same time.
Yeah, so this one technically could still work, but there's a reason when the market's not going well, Nothing really works.
Yes, definitely want to be aware of broader market conditions. And let's cap the day off with a look at JPMorgan, because with all this talk about the manufacturing index and then the yields plunging, that obviously impacting JPMorgan, and that stock recently tried to break out, but it is now definitively below the buy point today.
Yeah, I mean, the buy point is still valid. It could still work. But,
right.
I mean, basically, JPMorgan had rallied with Treasury yields when they went up from about 1.45 to 1.9 in just a couple of weeks. And they held on okay as the yields came down. But today, as the yields first went up and then reversed sharply lower, and JPMorgan finally couldn't hold on. A lot of other ones, Ally Financial, a lot of these other ones, or other ones that didn't quite break out, they're pulling back, and it's just a tough situation. This is one reason why bank stocks, it's hard for them to outperform long term, because there's sort of this interest rate play. I mean, they need the economy going well, the stock market going well, and yields going well. If all that works, they might outperform, but if something doesn't go that way.
Yeah, that's right. A lot of factors there. And, market conditions aside, as you mentioned, just because it did pull back below the buy point doesn't mean that buy point is no longer valid. We would have to see a decline of 7 to 8% below that level for it really to be considered broken. And we're not seeing that yet.
Yeah, absolutely.
We'll just have to see what happens. All right, everyone. Thanks so much for watching today. Before we go, we want to let you know that we do have a new episode of our investing strategy show out now. We have a new episode every week, and we do that from the NASDAQ market site in Times Square. And this week's guests were Equities In, commenting on the IPO market, all the crazy stuff that we're seeing right now between WeWork and Peloton and valuations and business models. So it's a very interesting discussion. And we also were able to speak to an AI and fintech consultant and investment, taking a look more at the private market side and the dynamics there, especially between the US and China, given the broader trade war tensions, and then also this kind of AI war and for dominance that we're seeing between the US and China.
Yeah, it's sort of behind the scenes, but it's very important.
Yes, that's right. So make sure you check that out, investors.com/investing strategies. That was a very long-winded promo, but one more for you before we go. We are on social media. So if you are not following us across all of our social platforms, be sure to do so now, not only on Twitter and Facebook, but also YouTube and Instagram as well. Follow and subscribe for all the latest. All right, everyone, thanks for watching, and we'll see you right back here tomorrow.